welcome back. Our next panel is called Financial Technology as a Force for Good. Building greater, more sustainable economic growth can improve the lives of everyone in the world, and with technology as a force for good, we can accelerate the change. You'll have a really interesting panel ahead of you with some fantastic panelists from different parts of the world. And I would like to hand over to my great colleague Sebastian, Head of FinTech Alliances here at Copenhagen FinTech. And you moderate and take it away.
Cool. Thank you, Sarah, and welcome. We are live once again here from Copenhagen. Now, in just a moment, I would like to ask my panelists to introduce themselves. Just before we do that, I thought I would set the stage for what we will be talking about a bit here today. So I read a very interesting news article just about 10 minutes before coming on stage from a local Danish news outlet stating that the government of 14% of the population of the world is accounting right now for the purchase of about 53% of the most promising COVID-19 vaccines. I think that's a really intriguing fact that perfectly sets the context for what we are to talk about today, which is we have all these incredible things we can do with technology, especially financial technology being applied to solve some of the impact challenges around the world. But technology itself can be a force for good and for bad, and however you want to think about it, it is contingent upon the agency of the people utilizing it. That will be the discussion point for today, where we'll be diving into how financial technology is being applied to solve some of the big impact challenges around the world. And we'll be talking about how technology certainly is a force for good, but also some of the caveats or pitfalls that you need to be mindful of when wielding this technology. Hopefully in doing so, we can also talk a bit about some of the future outlooks for a globally fair economy. I know that there are some people in this panel who are very qualified to speak about this. But before we get into that, I would like to just welcome my panel and invite them to introduce themselves. So Lise, could I get you to open and say a bit about who you are, the organization you represent, and your role within that organization? Lise, we have no audio.
Sorry, that always happens. Hi, thanks for having me today. I'm Lise and I'm Head of Sustainability Analysis at Matter. We're a sustainable finance fintech company based in Copenhagen. I have a background in environmental economics, in corporate sustainability, and in sustainable finance. Most recently, actually based in Singapore with the WWF finance teams. I've met both Bradley and Mikkel in Singapore before, some familiar faces. So Matter exists essentially to help investors invest their money sustainably, with the ultimate aim of shifting capital to meet the Sustainable Development Goals. And we do this by creating visibility into the sustainability performance of portfolios using a data and tech-driven approach. And so essentially we see that the transition that we're facing now is a really urgent one, and we're not going to solve our systemic challenges unless we shift both money into SDG solutions, but also mainstream capital away from the very issues that are causing a lot of the challenges that we're facing. So the problem that we're seeing at the moment that we're solving is that sustainability isn't always easy to understand or communicate when it comes to the finance sector application. We have ESG or sustainability ratings that are largely uncorrelated, and investors and ultimate owners of capital don't always know how to turn their preferences into action based on this. So what we do is essentially organize sustainability insights in a clear and transparent way, so that investors can easily compare metrics that matter to them and guide their capital on this basis. And at the heart of our approach is essentially taking in expert insights and analyses on the issues that matter the most, whether this is climate change, human rights, labor rights, deforestation, drawing in expertise from NGOs, academia, and think tanks that know the most about these issues and are best placed to say what we should be expecting for companies and how companies are acting. And essentially, we are using technology to amplify this multi-stakeholder voice in investment decision-making.
Cool, thank you. So perhaps a lot of interesting discussions here about bias in the application of AI. And Victor, I hope you're well. Could I get you to say hi?
Hey, hi. I think Sebastian is asking me because I just had surgery on Monday, so if I look cranky, it's just that I find it painful to smile today. So my name is Victor. I run programs and strategic partnerships for Citi Ventures for Asia. And one of the main programs that we run here is our venture builder called D10X, which this year has specific focus on sustainable finance. Or this year, I mean 2021. My background is in decision sciences and technology. I spent about 12 years as an entrepreneur before I joined Citi to see if it's easier to make change from the other side of the fence. My interest in sustainability and sustainable finance actually was conceived in Copenhagen when I was in my undergrad in Copenhagen Business School. So I'm glad to be on this panel right now and looking forward to the discussion.
Thank you, Victor. Bradley, could I get you to go next?
Thanks a lot. My name is Bradley Busetto. I'm the director for the UNDP's Global Center for Tech, Innovation and Sustainability out of Singapore. For those of you who don't know about the UN Development Program, it's the world's largest development organization. Focuses on alleviating poverty and human rights and governance for the poorest, most vulnerable people in the world. Our mandate out of Singapore is figuring out how to leverage technology, to use technology for good, and especially in the developing world, in the countries with lower resource settings. So that's what we're working on. And in particular, relevance to this session is they do have a partnership with Copenhagen FinTech Association, just announced like yesterday, right, at SFF, where we're working with them on an impact venture accelerator, linking up cool impact-focused fintechs from the Nordics to ASEAN, and the UNDP's role is to provide that impact, depth of impact for these companies, and one of them, in fact, is Matter. So I'm happy to be here and happy to see Lise and Victor and Mikkel and others that met before.
I should just add that Citi and DBS are also a part of the program that Bradley mentioned. So on that note, Mikkel, maybe I can get you to say hi.
Yeah, for sure. And I didn't have any surgery, Victor, so I'm okay to smile today. There's lots to smile about. So I'm the Chief Sustainability Officer for DBS. In case you don't know them, we're one of the largest banks here in Asia. And a surprisingly large part of what I do is actually trying to find ways to use technology and innovation to do essentially two things. We have a lot of focus on how do we help with financial inclusion, breaking down the barriers to some of the 1.7 billion people without access to finance. Another key area is to instill trust into some of the nature-based solutions that are becoming investable and online. Some may have seen, you'd be forgiven if you didn't, that there was an announcement that Singapore wants to build a carbon marketplace for nature-based solutions. And just earlier today, we announced another accelerator together with Google and the World Bank and a couple of others, Temasek and in US, to try and focus on what are some of the monitoring and censoring technologies that can help create trust in nature-based solutions for carbon credits. So those are just a number of the things that I'm involved in on the technology side. On the same side, I'm also a user of some of the data that Lise is talking about, and I am as frustrated about all the problems that we have with ESG data and ESG ratings and all those types of things. So everything that Lise will develop will be good for the world, will be good for me. So I look forward to the conversation.
Cool, thank you very much. And now that you touched upon the topic of financial inclusion yourself, I think that would be a nice starting point for us to dive into that a bit more. So you mentioned these 1.7 billion adults around the world without access to the formal financial system, credit ratings, loans, etc. No savings, no insurance, and so on. And I think there's a very commonly held belief that access to these tools will lead to an improvement of quality of life over time. And this is also something we believe here in Copenhagen FinTech and support. A discussion that I hear less often is will taking this pool of people and pushing them into a formalized economy make them less marginalized? Is there a risk perhaps of creating a new pool of marginalized people within the formal sector? And how do we help alleviate the risk of this happening and sort of accelerate the lifting of these people into the system and then continuing upon that, developing them within the system? And I think, Bradley, if I may call upon you first, as I'm sure the UNDP has some thoughts on this area. Can you share your reflections?
Yeah, I mean, it's a great question. I look forward also to hearing inputs from colleagues too that are here. But so within the UN, right? That's our big push around digital finance too. Is how to make it a force for empowerment and digital inclusion. And you've seen that with COVID and the pandemic, there's been this more broader acceleration of digitalization around the world. But digital finance has been a lifesaver for many countries, many people, thousands of people around the world, right? Like crowdsourcing platforms to get emergency supplies to folks, payments of essential health workers. Some of our partners in Sierra Leone and Myanmar and Vietnam tell stories of this in the very early days of the pandemic, and very quickly moving to digital finance as much as they could, at least. So, yeah, of course, it's great to just get the mass numbers out there and get as many people that are unbanked or underbanked banked. But surely, yeah, there is this issue of a digital divide. First of all, there are a couple pieces of your question, I think. But how do we figure out? How do we lessen the impact of that digital divide? There are issues there about more fundamental ones about connectivity, and for example, just having a smartphone, right? I mean, women are much less likely to have smartphones in Africa and in South Asia, for example, right? So there's a sort of gender digital divide that we need to work on, and these things take lots of work, and it's not just one of my colleagues, to him, Callan, who pointed this out, it's not just about like owning a handphone, but it's, or having access to it. It's being actually own it, right? And so many women in so many countries maybe have access to a phone just for a few minutes a day, right? Where the man has the ownership of the phone. And so there are lots of really fundamental issues here, right? And then there are issues too. I'd like to hear from folks on the panel. Like it's in our mandate to help countries leapfrog, right? It's sort of in their digitalization journey or the technological journey. That's what we're trying to help countries do. And you like the advantages of digital medicine in rural Africa, for example, or telemedicine in rural Africa, or rural South Asia, for example. But what about problems of like the downside of leapfrogging? Like in the old days, a bank, no matter whether you were like in rural Idaho in the US or rural Africa, the banks would often be like the foundational bit of a community. Once a bank came in, there'd be a general store, there'd be an insurance company, there'd be a post office. It would start building up the infrastructure that would build a community, right? Kind of organically. Now, with digital money, digital finance, maybe that's not happening, right? So again, sort of amplifying a digital divide. How do you then replace that organic community that was happening to some extent, at least, because an actual physical bank was there? So the UN and others can help, but I think it's still early days, and I'd like to hear from others too about this. But those are some of my reflections on this. I mean, so it's not just about inequality; it's much broader issues of connectivity and gender and other issues around this divide.
That's very interesting, Bradley, especially your comment about sort of digital money not necessarily being equal to lifting the community building role. And I think it could be very interesting to hear from you, Victor and Mikkel, your thoughts on the role of a modern bank in a digital world. in enabling financial inclusion, community-driven or otherwise, both in the short term and in the longer term?
Yes, who do you want to go first?
You can open if you want.
Oh, please, after you.
That's exactly. Never speak up, then you get to go first. So obviously, I want to answer your first question first, and I'll take that question about the role of a bank. You're saying, are we at risk of marginalizing people in a new way? Yeah, sure. There's always these types of risk, but honestly, if you think about the negative repercussions of not having access to basic financing, I think the value of getting them as included in the financial system far outweighs that risk. I actually find that there's a different type of risk that we don't speak about often enough, and maybe that partly answers your question, which is we have to remember that when these people come online and become part of the system, they're vulnerable. And they're giving up a lot of private data as they do so. So, for example, some of the work that I'm very encouraged around and that we've been part of as well is this idea around using other types of data to allow access to people by giving them essentially a credit score when they don't have a credit history in the formal economy. Now, that's all great, but you also get access to data that these people might not otherwise be willing to give up so easily. So I think we have to think very carefully around making use of that data in a sensible and responsible way. Otherwise, we end up actually creating, we are solving one problem and we are creating another one. Now, in terms of the future of banking, I think it's pretty obvious that banking as a product itself is becoming more and more open platform, open sourcing, it becomes invisible. And therefore, you got to be value added in other ways, like the ones that I talked about as well. I fully imagine a future here where the digitalization of all banks means that you essentially will have that this is a backbone, and whoever has the strongest credit history and able to do the best IT will be serving the most clients around the world. So I think banking is here to stay in some shape or form simply because of the trust that we have, but it will look very different in terms of the network that we see today and the branches that are there. But it's not going to happen overnight. It might happen fast, but it's not going to happen from one day to another. And there is this idea that some of the branches that exist today in the rural area, we do need some of that for a while longer, just to be able to service those who may not have quite as digitally as other people. So I'll hand it over to Victor to add.
Thanks, Mikkel. I would actually agree with you. I would separate the concern with between inclusion and equality. In essence, what we need to make sure is that people have equal access, as Bradley pointed out, for example, with his example with mobile phone access. Once people have equal access, of course, there will be other problems that come out, and then we'll need to solve them. Luckily, we will never run out of problems to solve, be that in finance or in any possible way. So the engineers among us can sleep happily. The other thing that I wanted to add is with regards to the role of the bank. The way I look at it is, and I think now as we've kind of like forced a large portion of humanity onto digital platforms, prepared and unprepared in some ways, as some of the experiences with the Singapore FinTech Festival might say. We probably noticed that there's a difference between the ability to provide infrastructure, be that technical infrastructure, social infrastructure, or whatever, and the trust in that infrastructure. And this is where banks, I feel, still have an important role to play with regards to the trust in the system that they have. And I think, luckily, this crisis, it's not on like the crisis that's going to come out of COVID is not the banks' faults, which is why, unlike in 2008, 2009, trust in the system is not undermined as much as it was then. But I think the ability, especially as money and information kind of converge and to a certain extent swap places. In a sense, money is now no more than data, and to a certain extent, data about money is more valuable than the money itself. The question becomes, who do I want or who do I trust to run my infrastructure? And there's examples between big tech and traditional institutions, etc. And I think looking at how both governments respond, including, for example, what we've seen in China, is in what I see as a reversal to a certain extent in the kind of aggressive pro-digital kind of policy there, but also what we're seeing everywhere is governments and people tend to trust to a certain extent their banks. So I think that role of trust, building around that, and again partnering with technology companies who can provide to some extent a better infrastructure is probably important in the coming decades as well.
So it would be fair to say in this context that the banks become custodians of trust on behalf of the companies they work with?
Yeah, that's a good way to simplify my rant.
Can I ask you, Bradley, would you agree with that statement?
Well, yeah, an interesting notion too about social infrastructure, which is much bigger than this discussion around digital finance. It's more about digitalization. But on that, I'm sure everyone noticed that. I think it was yesterday, the day before, the governor of California announced that California was, this technological marvel had come up with a contact tracing app for COVID, right? So, I mean, of course, Singapore did that 9 months ago, and I raise that because it's that's an issue of trust too, right? I mean, that's really what that's about. It's not about that they lack the technical means to do this for 9 months in California, in Silicon Valley, but one of the things that we're focusing on, speaking of trust, and it'd be an interesting experiment, but another partnership that we announced in the UN. So our role in all this is really, helping nudge ecosystems as much as we can. It's very vague and fuzzy, but helping governments, helping sometimes monetary authorities or their equivalent, coming up with the governance and sort of the regulatory frameworks behind all this. That's where we think we can have some added value, and maybe we are already having a bit of added value. But we're embarking on initiating a partnership with the Monetary Authority of Singapore to help amplify and expand, some of the work they've done with building a digital finance ecosystem in Singapore and to some extent beyond, with the regulatory sandbox and APEX and BSB, and focusing on small and medium enterprises in Africa. So working on taking a couple maybe ecosystems in Africa, a couple countries in Africa, working with a couple partners there to both work on the underpinnings of digital finance ecosystem and with a special focus on really the economic lifeblood of the developing world, which are SMEs, right? The small and medium enterprises, which have been absolutely devastated as a result of the pandemic. So that'll be really interesting to see how that works in terms of trust too, from all angles. But stay tuned for that, and love to collaborate with you guys on that as well.
Okay, thank you, Bradley. I think that's a very interesting answer. Do any of you guys have a comment to add to what Bradley just said? No. Okay, then I think I would like to change topics a bit now and move on to talking about, we're already a bit touching upon it, but the balance between monetization and impact, or the ethics of making money on impact-related business models, if you will. Now, I think increasingly it's becoming sort of commonly held sense, at least in the part of the world where I'm from, that alignment between sustainability and profit is now a good thing. It's no longer opposing. They are now sort of one and the same, at least for the major enterprises who carry in the Nordics a very large degree of social responsibility. Now, I'd just like to hear your thoughts, and maybe Lise, you can share a bit your take on this. Sort of, if companies around the world, either large enterprises themselves or banks as custodians of trust on behalf of other companies, have a moral obligation towards a better world, how is this aligned with making money on impact business models?
Yeah. Thanks. I think it's a really great question. I think that the issue isn't monetization, and so in short, I don't think there is a misalignment between impact and monetization. So the problem has been that monetization has been profits at all costs in the past. So it's been privatizing profits and then externalizing the environmental and social costs of making those profits onto society and onto the environment. And so what we've ended up is a world with so many systemic environmental and social challenges that we now have this term impact, which is essentially our bid to now fix these issues, which the process of externalizing externalities has caused in the first place. And so essentially what we really need to focus on is rather saying, we need to get the prices right. We need to start accurately reflecting environmental and social value in our economic decisions, in our financing decisions, in the way we look at products, in the way we look at stocks at companies. And by doing so, we will naturally start integrating impact or integrating environmental and social value into the financial value of the things that we're building in our world, and especially at the financial value that we put on certain assets. And so we could almost turn the question around and say, what we're doing at the moment is monetizing negative impact. And what we need to do is actually just start a process of taking away the perverse incentives, of taking away the mispricing that we have in our economic system, so that the balance between what we see as a financially attractive company asset project will shift from what is currently bad to essentially good or impact assets. So, that is to say, fossil fuel companies, for example, are actually extremely overvalued because essentially a lot of the assets that we place value on are carbon reserves that should be unburnable and should never be burnt and therefore monetized. 2/3 of these fossil fuel reserves need to be kept under the ground. And none of these fossil fuel companies have targets aligned with the Paris Agreement. That is to say, aligned with a future scenario in which they aren't externalizing the costs onto society or onto the future. So their value should be very different. On the other hand, the value of companies that are more regenerative, that are more circular, that actually put social value, communities, workers, for example, at the heart of their business models, should be valued more if we can start integrating the benefit to society of these social and environmental impacts. So I would say what we need to do is, not take the conversation away from whether sort of monetization of impact is good or bad, and say that if we are to exist in a market-based economy, we will always need to monetize whatever we do, but we need to make sure that we get the prices right and that we start valuing the right things.
Thank you, Lise. Victor, can I ask you as a venture person to share a bit of your thoughts and maybe also to comment a bit on what Lise just said? And maybe also, if I may ask you, when you look at an investment case, do you look impact first or business first?
So I rarely look at investment cases. Most of my work is on venture building. In general, I think like the moment you become lucky enough to be big, significant as a technology company or whatever company, old infrastructure industry, whatever, you have a impact or a social responsibility just by virtue of the footprint that you have in the world around you. So that's important. Now, how do you value that? How do you measure that? Is a tricky question. I think we've made a lot of progress in recent years in attaching measures. These are not synchronized and easily transferable across industries and companies and geographies, but it's something. Now, as someone who has started businesses, I can tell you that you always try to have some kind of a vision plugged in, but it's difficult to price and factor all the costs and negative externalities as part of your business model. You are bound to underpay at some points. You're bound to go through the survival process through your nails and teeth. And so from like earlier smaller companies probably need to be somehow either protected or excused from the negative impact that they may or may not create. Scaled companies, however, it's a matter of sizing up and almost like figuring out how to tax yourself for certain implications that you might create. I think it's really complex, especially when you look between different types of impact. You mentioned, Lisa, oil companies and them being undervalued or overvalued. Right now, I'm not sure if I should be scared more from oil companies or from Facebook, for example. I mean, I'm not sure which one is going to, jeopardize my peace and tranquility more in the near term, right? So, how do you actually benchmark, compare, and charge for the positive or negative externalities? So, long story short, while I do agree that we need we have right now started to look at a better process to measure and control, and we need to further improve on that. I think we need to rethink what enterprise function is as a society. I think the way that it's been so far, it's kind of run its course. So we need a different type of corporate governance systems, which might not answer your question, but it's how I feel about the topic.
Do you have any reflections on what that kind of corporate governance system might look like?
Not clear. I mean, I've looked at B Corps, I've looked at various types of organizations. I don't think that all of them hit it on the nail well enough. It's not a matter of the enterprise's relationship to government or enterprise's relationship to investors and other stakeholders. It's a little bit more complex than that. So I think we might need to be extremely creative on this as a society in the short term, because I don't think we have that long to experiment around this.
Bradley, could I ask you, coming from the UNDP, the future of corporate governance and the comparability of different areas of impact? I know it's a really big topic. Could you say a bit about which type of parameter we should prioritize in the short term, if at all it's possible to answer that?
Maybe I would take this question in a slightly different way, and that's kind of a question maybe for Lisa to consider. What is it that triggers an enterprise, a company to start thinking about not just kind of the transactional economic value or market value in the narrow sense of its product or service, but the societal value, the environmental value and cost, right? Like, is it regulation from above? Is it consumer sentiment from below? I mean, what's happening in the Nordic countries that's making it, how's it happening there, right? You can sort of isolate certain companies or certain sectors in certain countries, see how they've done it, but what's the trigger for that? To all of a sudden have that realization that, in fact, you have to have a broader sense of what that cost is of what you're doing, right? It's, a societal cost first, then a planetary cost, and so forth. How does that happen? So maybe a question for the rest of the panelists too. In other words, how do we really trigger sustainability in business is the bigger thing, right? Do you just do it from above, below, all of these?
It's kind of a supply and demand question, right? Lisa, do you have any thoughts on this? Now that Bradley called you out, yeah?
So, I mean, I think there are a couple of drivers that will apply to all companies wherever they're sitting in the world, but I think the drivers will come in a bit of a different mix and different strengths. But one of them certainly is regulation. So we're seeing, that there is, at least on a very simple sense, prices put on carbon, for example, but there might also be regulations around certain disclosures. Another one is certainly consumers having much more vocal and informed preferences about what they want out of products and of companies. And then, of course, market changes. So we see, huge buyers, for example, like Unilever Tesco, having stricter standards on whether it's deforestation, labor rights, etc. So that becomes, another driver for any company wanting to sell into these markets, to up their actions in that sense. And these drivers will be different and have different strengths in different markets. But ultimately, there's one driver that no company will be able to escape from, and that's also the physical effects of, for example, climate change and some of the effects of the systemic challenges that we're seeing now. I think climate change is the most obvious one to talk about. So even if companies do manage to avoid all of those other drivers, certainly they will have to pay the cost in environmental damages, etc. And so what this is about is rather about saying we can have an educated look at where the costs that are currently externalized in our business model are going to come back to bite us, whether that's through regulation, market drivers, consumers, physical damages to our business model, and start to react to those in a proactive way. In Europe, I think consumers and regulation have definitely been a big driver. I think in Asia, potentially changing global market preferences and standards, and maybe even a bit of regulation are the main drivers there.
So I think that's a really good point. I think if I might ask a counter question, it seems there's sort of a misalignment of incentives or time horizons going on here, because if you are, say, a Novo Nordisk in Denmark, you might have the capacity to have a longer time horizon and therefore also be aware of the environmental consequences. Now, if you are a sub-supplier of a sub-supplier to Novo Nordisk, perhaps in a factory somewhere in a rural country, you may even be one of the unbanked people that we spoke about before. Your time horizon is very different, and you might not be mindful of the environmental consequences of you having a job and being able to pay your bills in the short term. I think we are also seeing a rise of sort of sustainable supply chain finance, where it's kind of if certain sustainability parameters are met in production, then we can release funds and so on. Now, this is a question for all of you. I don't really know who would be better suited to answer it, but are we talking here about sort of us in the Western part of the world pushing out our worldview by sort of saying, here's the finance, you can only get it if you adhere to our way of seeing things? Are we asking people to consent to sort of build a better world? I know it's a broad question, probably also a tough one to answer, but I'm very curious to hear your thoughts. And whoever speaks up first gets to go. Yeah, have a go at it.
Yeah, I can have a go at that. I think what you're touching upon is one of the most fundamental questions between developed and developing countries. Before I give a concrete answer to that, I don't know why my picture does that, but let me go off picture so it doesn't frustrate. I think we got to go back and think about what Lise said before about this thing about impact. That there's this misperception out there that because we need 17 or whatever trillion dollars to reach the SDGs, then that becomes immediately an opportunity for finance. There's a reason why it doesn't, right? Because most of where the real SDG needs are unmet are in sub-Saharan Africa or Southeast Africa. But guess what? Most of the trillions that moves around the world goes between one developing country and another developing countries, because we want to invest in those things that make financial sense and not economic sense. And that's exactly what Lise is pointing to. And maybe we all know this, but I think it's quite obvious that when you start to think about like that, and when we don't price in externalities, we get these kind of perverse incentives where actually we will never get to solve issues like basic education, basic health things, because they're simply not financeable. Now, moving on to your question about are we being unfair by imposing Western standard on third world countries, I think to a certain extent we are. I think you got to come hand in hand between asking for step-ups, then you're going to come with the incentives as well. If you only use stick, I suspect that what you will find is that you will jeopardize either the environmental or the social benefits. And I think what we are at risk of doing right now is we're focusing so hard on one of the many problems we got to resolve. And it's a very important one, which is the environmental one, and more specifically climate change, that we forget that we got as many other urgent issues we got to deal with. but they're not as near and dear to the political agenda right now. Things like biodiversity or just social equality, than in a more narrow sense of basic poverty, that they don't get spoken about enough. So what am I trying to say with this? I think the whole thing starts with impact and showing clearly both the environmental and social impacts of the dollars that come through. And if we create a framework in the richer part of the world that makes it easy to happen, then we got to be conscious that we cannot have all these time. There is sometimes a trade-off. And as long as we're willing to fund that, so that there are compensation for those down the value chain, then I think we're doing just by the world. But just pushing it downhill and saying, oh, we don't care about your social problems, just live up to our environmental standards, I'm not sure we're ever going to solve these things in isolation silos.
Thank you, Mikkel. I think that was a very good answer. Would you guys like to add a comment? We have just a few minutes left. So if anyone has anything to add to that, feel free to go ahead. Bradley?
Yeah. I mean, agree. And there are different orders of impact, right? I mean, on the one hand, when you ask, let's say, a venture fund manager in Singapore who's investing in disruptive technologies across South Asia, right, in digital finance and in edutech and in health tech and digital agriculture, for example, if these are sustainable ventures or they're all about impact, I mean, that for that person and maybe for the people that are benefiting from all these disruptive technologies, that's like a nonsense question, right? Because the first order of impact is, could be, for example, does the technology or does it create lots of jobs or lots of employment? Does it help create livelihoods for people? Like Gojek has created thousands, millions of jobs. And you have to figure out the other side of that equation too. But so when you're talking about people in developing countries and those kinds of contexts, I mean, it's no, we can't, of course, apply our standards, but there are different orders of impact, right, and different priorities on the ground that make more sense. Is giving broader access to education or to healthcare? Is it making one of the founders fabulously wealthy, or do they have good governance in their business? That's not all clear, but there are other benefits too. So I don't know. It's something to consider.
I almost think that, it's like when you're looking at the train and you start thinking about, is it now the right time for me to start worrying about maybe getting off the tracks? You're probably kind of a little bit late. So my point being that my personal fear and the way that I would potentially start taking investment decisions for myself at least is what's the eminence and threat level. So when it comes to certain social issues, potentially if we have a chance to resolve those a little bit further down the line, very open to that. When it comes to biodiversity, nature preservation and climate change, given the fact that everybody's factoring billions/trillions of dollars of risks already in their models, it's real enough and dangerous enough and scary enough that I think that it caters for a unanimous approach, regardless of if certain standards are too Western or not. I come from a country that is gifted with a lot of forests, and for a long time, since my early years in Bulgaria, it's known that the moment that you put a price on the forests, you start cutting them off, and that's what's been happening. And the fact of the matter is that I don't care as a Bulgarian if what standards are imposed. I am aware that this is national wealth, and this national wealth also has regional and potentially global impact if preserved. So maybe I would sacrifice the provenance of several thousands of farmers for the sake of prolonged existence.
guys, we have to round off here. We are 30 seconds over time. I wish we could go on. It's such an interesting discussion. Thank you all very much for taking part today, for sharing your insights, and for having some really great answers. It's been a pleasure.
Thank
you, guys.